Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard Macbeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Great to be with you.
Hilliard, what happens when the deferred mortgage program ends allegedly at the end of September?
Well, first of all, probably what happens is they extend it. But assuming that it can't go on forever, it appears that something between 15 and 20% of all people that have mortgages have applied for deferral. And most of those applications came in March of this year. So 6 months goes to about September, in the middle of September to the end of September, somewhere in there. And it's 16% is a huge number. So there's about maybe 5 or 6 million people in Canada that are households that have mortgages. More people than that, just households. Out of something like 13 million households. And so if 20% of those, you're talking about 1 to 1.5 million households that are currently not paying their mortgages, which is probably one of the reasons why garden sales are so good and other things other consumer items seem to be flying off the shelves. But what happens when they have to start paying their mortgages? And not only do they have to start paying their mortgages again, but they have to make up the arrears. It's not, and I suspect, although I don't know this for sure, I'm just guessing that some of them don't understand that. I think they may not have. I'm sure the bank explained to them that it's not a gift; it's just a deferral, and they have to make it up. So there's two ways they can make it. They could say, okay, you get to pay a 6-month balloon number in September of all the mortgage payments you missed, or we'll give you a revised payment schedule, and we'll add the total amount of the money that you missed to the total size of your loan, and then we'll extend the loan by 6 months, and your mortgage payments will be higher now, or they'll be the same, but you'll pay for longer. And what that does is that increases the amount of interest, the total interest that people have to pay. So people will probably opt for that if they have that choice. They'll probably opt for deferring it. But is their employment situation that much better in September than it was in March? That's the question. Has the economy recovered to that extent that people are in a better position to pay their mortgages now than they were back in March?
BC tourism workers have been picketing the legislature, some going on a hunger strike because they say the provincial government isn't doing enough to support people who work in tourism or hotel workers. Is Alberta facing the same problem?
Well, I haven't seen picketing by, so tourism is a much bigger percentage of the GDP in BC than it is, especially in the summer, than it is in Alberta. But so I haven't seen that. And of course, Alberta has a different mentality when it comes to workers, because the workers, there's very little unions, much smaller union exposure in Alberta other than the government unions, public sector workers. So the workers don't tend to. I'm sure they're worried about their situation, but they don't tend to do collective action quite so much. But it's a huge problem. I honestly don't know what's going to happen. It depends on the virus. It really does depend on the virus. And is it safe to go on planes? Is it safe to stay in hotels? Is it safe to do all these things? Safe to go in elevators? nobody knows the answer to these questions. We've only have 5 months, 6 months experience now, maybe 7 months experience with the virus, and we don't really know enough yet. For instance, I saw today that New Zealand has cases now. They've got 104 cases, and they totally shut down the whole country. Being an island, it was possible to do that, and yet somehow they didn't have any cases for a long time, and weeks and weeks they didn't have any cases, and now it's started up again. So we don't know, and a year from now we'll know a lot more. But in the meantime, if we don't know, then people will be reluctant to go back to restaurants, go back to movie theaters, go on planes, all that kind of stuff. And all of those service industries have become much bigger percentage of the GDP than they used to be.
How important is it for schools to reopen to help the economy?
Well, there's a good question because I don't know if you've noticed this, but I'm sure some people have. The kids going back to school, it seems like it's the contact with the children in school that transmits the colds, or maybe it's the office environment, because I haven't been to the office. I've been working from home for, I guess, 6 months now, almost 6 months. So whether it's the office or the kids going back to school, and it could be at the office you run into people that have kids that are in school, and so that's where the colds come from. We always said that in our office that it was the fault of my partner John McLeod, who has 3 kids in school. That he would always get the colds, and then we would get them. So the idea of going back to school is scary for the teachers, it's scary for the people that work in the building, scary for the parents, scary for the grandparents. If COVID-19 is similar to the transmission of a cold, then obviously more people will get it. Exposure if kids are in school, because there's no way. I haven't seen any indication that there's any way that kids can be convinced not to get close to each other in school. I think that's impossible. So and that's interesting. There would be there'd be an interesting study to do in terms of, can education go online? And certainly university education. There are other benefits to being at university other than just learning the material, obviously. In fact, as I recall, it was more like 80% social, 20% learning, but maybe that was my fault. I don't know. But if you just took the learning part of it and put it online and had the professors and the students, maybe a 4-year degree could be done in 2 years. I don't know. But then what do you do with all those buildings? And there's so many aspects to it. I was researching, for example, landlords with apartments to rent. Huge problem with the shutdown of Airbnb and that sort of thing. In Toronto and Vancouver, there's a very large number of condos that have come on listed as rentals, and so it's never been better for people that want to rent a place. And then of course if the university students don't go back to university in the fall, then there's a whole bunch of landlords that do very well renting accommodation to university students. And of course there are some problems. There's the higher maintenance issues. There's issues with noise from parties and stuff like that. But it's been possible to make a very good revenue. Probably one of the best landlord-tenant situations for the landlord has been apartments close to university. And if they don't come back, what happens to all those apartments?
We'll have more with Hilliard Macbeth right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, is Canadian real estate making a comeback?
Well, that's what they say. I've done, of course, many interviews and talked to people in Toronto and that. And one of the things that came out just a week ago when I was talking to somebody from Toronto was there's a surge in single-family home sales in Scarborough, Ontario, which is a kind of an inexpensive suburb east of Toronto. And I think there's a lack of transit now. I could be wrong on that one, but there is a controversial proposal to build the subway out there. So at any rate, a whole bunch of people are buying these $800,000, which sounds very expensive to me, but anyway, homes. But then it turns out that there is a $40,000 interest-free loan available for small business people, self-employed, contractor-type people, sort of more or less no questions asked from the government. And if you meet certain requirements after by 2022, you only have to repay $30,000 of the $40,000. In the meantime, it's interest free, and there's no payments until 2022. And so interestingly, $40,000 is 5% of $800,000. So it seems like a whole bunch of self-employed contractors, for instance, taxi cab driver or somebody like that, are able to buy the $800,000 homes. So is it government subsidy money that's going into this surge in homes? But at any rate, there does seem to be a bit of a surge. And everybody I talk to in real estate says, well, the interest rates are really low. Like some people are saying below 2%. And but of course the problem with that is, to use that to continue with the Scarborough example, $800,000 is way too expensive for the average family that's going to live in Scarborough, especially with reduced incomes during the recession. So, low interest rates doesn't save you from the risk of buying an $800,000 property that becomes a $600,000 property. And that's the problem. So I'm afraid that, this very odd situation, and this is extremely odd, this situation with the worst recession in memory since 1945, and some of the highest asset prices ever, both in the stock market and in real estate.
Are you surprised that real estate prices haven't fallen more in this kind of environment?
Yes, I am. I'm shocked, really, at that. And of course, one of the things is, for instance, use that example of all these condos that have been listed for rent. What's happening there seems obvious is that people, when they go to list their condo for sale, they're finding that they can't get the price that they want. So the sellers are extremely fixated on their anchor pricing, which in the case of single-family homes might be, the price that a home sold for in, at the peak in 2017 or 2018, and they're just not going to let it go below that. Or in the case of the condo, it would probably be more likely to what they paid for it, and if they bought it recently. And so instead of taking their lumps and selling, which is normally what happens in a recession, people are holding off and just trying to rent or do something different. And that has really never happened before. In recessions, generally, people get forced to sell for various reasons when there's a housing correction. Of course, we haven't had a housing correction since the 1990s, and so in Toronto anyway. So nobody knows how to behave. But it would, if these people are mistakenly holding their properties off the market, thinking that prices will come back to what the price that they want, the anchor price they have in their mind. And we're heading into a recession that's twice as bad as the global financial crisis. They're going to be very disappointed. And, because what happens eventually in a recession that's bad is the lenders get involved when people can't make their mortgage payments. Right now, 16% of people with mortgages are not making any mortgage payments. So we have no idea what happens. The mortgage cliff comes in September, but most likely, it's almost a certainty that at least some percentage of those people will still be unable to make their mortgage payments in September, and eventually the lender cannot be patient forever and has to foreclose on those properties, and that's when you get, because in foreclosure prices get knocked down much more than they should in normal markets, so you get all kinds of crazy things happening. But that becomes the new anchor price, and it's much, much lower than what people were getting in a normal market that was still functioning properly.
We'll have more with Hilliard Macbeth right after this.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, are you surprised we're in a recession? They say it's going to be twice as bad as the one in 2008, that the stock market is still booming. It
is a shock. And of course, people attribute it to the amount of money that the Federal Reserve and the Bank of Canada and the Bank of England, the Bank of Japan, all these central banks have pumped money out, and people are assuming it's making its way to the stock market, but I don't think that fully explains. A lot of that money that gets printed that way actually doesn't make its way out of the reserves in the banking system. So a lot of it might just be a psychology, and it's just really, really surprising if people don't have a more cautious mentality given the severity of what we're facing. It's possible that the virus ends by September, October, and we're back in business by December, but it's unlikely. So normally people would be discounting it and thinking, well, I better play it safe, but they're not. So they're buying stocks, and we know this from our practice. We have clients that invest with us, and we can tell from in March there were a few people that were saying, "Oh my God, the world is coming to an end. Get me out of the stock market." But that didn't last very long, and now it's more likely that people are saying, I want to buy some of those gold stocks, or I want to buy some of those renewable energy stocks that are doing so well, or anything really. And so it's shocking because the earnings undoubtedly are going to drop. In the global financial crisis, the earnings on the S&P 500 dropped by 50%, and right now the S&P 500 is trading at about 20 times earnings, 21 times earnings, something like that. If earnings drop 50%, we'd be looking at a 40 times multiple, which would be the highest. The only time it got higher than that briefly was in the dot-com bubble. But we weren't in a recession in the dot-com bubble. It was just a bubble in stock prices. But there was a recession, but it wasn't very severe. It was nothing like this, nothing like 2008. So for the ratio of stock prices to the earnings to be so stretched, going into such a severe recession is never happened before. So we're within, let's put it this way, we're within 1% of the all-time record highs in the valuation of the stock market, and this is probably the second or third worst recession in the last 120 years. So the two just don't match up.
How do you think gold is going to do from here on in? It had quite a drop today, $90, I think.
Yeah, the price of gold, it's within, it was very close to, it surpassed its high, obviously, a long time ago in, I don't know where, I think it was around 1900, hit close to 2100. So it's a couple $100 above the high that was hit in 2011. But when you adjust for inflation, the number that gold needs to hit is 2189. So it didn't quite make it, and then it's dropped down back below 2000. Now it's down about $80. So, or a 4% decline. But gold should do well. There's a couple of really good things going for it. Although I tend to focus more on the gold mining companies and their profitability, but the shortage of gold, and there seems to be central bank buying all over the world. The only central bank that isn't buying is the Bank of Canada, the Canadian central bank got rid of all its gold. But most central banks, Russia, China, other ones, are big buyers right now. There hasn't been a big discovery there, so there hasn't been any major discovery of a gold mine in the last 3 years, and there has been some exploration done, but most of the exploration has been done to extend existing properties, so they have not been going out in what they call greenfield exploration, where they're looking for a brand new property. So there's going to be a lag time. It takes, even if they discovered a major mine today, it would be 3, 4, 5 years, given very favorable environment for permitting and approvals and all that, before that thing could come into production. So there's going to be a shortage of production, and of course, the gold business is really strange in that people are willing to hold gold, and if the price gets too high, they might sell it, and so the annual production is not that big a factor in the total demand and supply equation. But if you've got a lack of new supply being mined, and you've got people that want to hold it as an alternative to paper money, you've got the potential for a big upside move. And the 2189 is only 10% away or something like that. I'm pretty sure it'll be surpassed, and probably prices will go higher. But that isn't where I would concentrate my efforts. I would, for investors, I would recommend that they look at the companies that mine gold, because they're extremely cheap. One of the biggest ones, Barrick Gold, just increased their dividend, and these companies have been so conservative for so many years, and now they're starting to really make a lot of money. Their costs roughly are $1,000 an ounce, and the price roughly is $2,000 an ounce. So they're going to show up as very profitable companies in an environment where a lot of companies, airlines, restaurants, all kinds of other companies are probably not even going to survive. A lot of them are going to go bankrupt. Shopping centers. So the gold mining industry will stand out as very exceptional.
Hilliard, thank you so much for chatting with us.
Thank you.
My guest has been Hilliard Macbeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethmcleodgroup.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@housestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.